Hey everyone, and welcome to a special edition Crackberry.com podcast. We are going to listen to the RIM earnings report live, and then we're going to go straight into commentary with Kevin Michaluk, none other, Adam Zeiss, and Chris Umiastowski. Now, Kevin is actually on the ground in San Francisco right now on a terrible internet connection, so you're going to hear him drop in and out and do everything he can to be on this call, but it's going to get choppy, so please bear with us. Other than that, strap yourselves in. And here's the show.
Hey everybody, Kevin here from Crackberry.com. This is a special edition podcast. We could call it, I was going to call it Rimageddon Cast. I think we did that almost a year ago. I don't want to go there though, but we're doing it in honor of RIM Earnings Day. They have just announced their Q1 fiscal 2013 quarter. We knew it was going to be bad because the CEO, Thorsten Heins, on May 29th issued a business update saying it was going to be a bad earnings report with an accounting loss on the books. Looking at the press release that just hit, I mean, the biggest thing that jumps out at all of us is BlackBerry 10 phones are not going to ship in 2012. They have now been pushed back to Q1 2013, which for all of us is super, 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 super depressing. So on the line today, we've got Chris Umiastowski. Say hello.
Hey, how's it going, everyone?
Not good, obviously. We got Adam Zeiss.
Greetings.
And in about 5 minutes from now, we're going to be pumping in the webcast. So basically, RIM CEO and, who's usually on the line? Actually, I don't even know now with the new management. I mean, is Adele still there? No.
It'll be Paul Carpino running it from an IR perspective, and it'll be Brian Badilka, the CFO, and it'll be Thorsten. It'll be the same as before, I think.
And they'll run through the statement, the kind of, well, not necessarily sugar-coated stuff, but the prepared statement and remarks based on the press release. We might pick up in a few tidbits of additional info off of that. And, I think Heins has been pretty straight up so far about the challenges they're facing. So I'd expect some of that straight upness to come through the statement. And then after that, it's going to be the Q&A. And that's kind of what I think where things will get a little bit dirty today. Because I think there's a lot of hard questions to be thrown at Heins. 2013, That sucks. I mean, that really, really sucks. So, Chris, we got a couple of minutes. Why don't you talk a little bit about the numbers? Go through the highlights of the press release, and then it should be close to that time to tune into the webcast.
Yeah, it looks like we got 3 minutes or so, assuming they started on time. So, okay, looking at the highlights, so they missed the consensus estimates. Not that there was any official guidance now on the quarter, but 2.8 billion in revenue. The street was looking for 3.1. The street thought they would break even more or less, like lose a penny a share, and they lost 37 cents adjusted, so it's pretty bad. The street thought they would ship 8.7 million units, and they only shipped 7.8, I believe it was. So the financial numbers obviously are way, way below expectations, and it looks like the commentary suggests it's only going to get worse. No surprise there. Probably a lot worse given how much BlackBerry 10 is delayed now. I was interested in their cash flow statement because they did say that they were cash flow positive for the quarter. Their cash flow from operations, which is generally the money that the business brought in, right? And then you've got to subtract them from that, what you spend money on. So if you're buying patents or buying businesses or buying equipment and stuff like that, then obviously that's a negative cash source. So they generated 710 million, so they say. But that unfortunately includes about 400 million coming from a reduction in what's called working capital. So for those of you who aren't finance geeks, that's basically, taking down your inventory levels. So as you sell your inventory, that generates cash, but you've already paid for it. So their real cash flow generation was only about 300 million in the quarter. The good news is that's still a positive, and so that means RIM can still swallow somewhat of a contraction in its business from here, and they'd still be approximately cash flow break even. Plus, they're doing cost restructuring. They announced that they're cutting 5,000 jobs. That's supposed to save them $1 billion a year compared to their Q4 spending level. So, $250 million a quarter. So they basically can adjust down. Like if their business falls by another $500 million a quarter in profit, they would be at about cash flow break even, which means their balance sheet should be safe. But I say should because I really don't know how bad things can get. I'll stop there in case you have any comments you want to make, either of you guys.
No, I think the call's probably about
just kind of a state of depression.
I'm in a higher state.
Is it? Can you hear it?
Is it on yet? There we go.
Should be.
Okay. Well, Renee, pipe it in the moment it starts, I guess.
Please continue to stand by. Your conference will begin shortly.
So we may as well, I guess we can continue to think about it a bit here. So I'm thinking about the last time Mike and Jim did a conference call and they said that BlackBerry 10 was going to be delayed from Q1 last year to later in the year, and they blamed it on an LTE chipset. And when I wrote my summary of that quarter, I pretty much called them out as lying to us, right? Saying, like, there's no way that that's true. It's an OS issue. And I think there's no doubt in anyone's mind that that is now the case.
Continue to stand by.
Ladies and gentlemen, thank you for standing by. Welcome to Research in Motion's first quarter fiscal 2013 results conference call. At this time, all lines are in a listen-only mode. Later, we will conduct a question-and-answer session with instructions provided. If anyone has any difficulties hearing the conference, please press the star followed by the 0 for operator assistance at any time. I would like to remind everyone this conference is being recorded today, Thursday, June 28th, 2012, at 5 p.m. Eastern Time. And I would now like to turn the conference over to Mr. Paul Carpino, Vice President, Investor Relations. Please go ahead, sir.
Great. Thank you, Luke. Welcome to RIM's fiscal 2013 first quarter results conference call. With me on the call today are Torsten Heinz, our Chief Executive Officer, and Brian Bedolka, our Chief Financial Officer. After I read our cautionary note regarding forward-looking statements, Torsten will provide a business and strategic update. Brian will then review the first quarter results and our outlook. We will then open up the call for questions. This call is available to the general public via call-in numbers and via webcast in the Investor Relations section at rim.com. The webcast includes supporting slides that can be viewed through your personal computer or your BlackBerry Playbook tablet. A replay of the webcast will be available on the rim.com website. We plan to wrap up the call around 6 p.m. Eastern this evening in order to let as many people as possible ask questions. Please limit yourself to one question and one brief follow-up. Some of the statements we will be making today constitute forward-looking statements within the meaning of the United States Private Securities Litigation Reform Act of 1995 and applicable Canadian securities laws. These include statements about our plans, strategies, and objectives, and the anticipated challenges and opportunities in the coming quarters, our expectations with respect to product shipments, revenue, gross margin, operating expenses, our anticipated operating loss in Q2, net subscribers, ARPU, and our cash position, our product development and marketing initiatives and timing, including our expectations relating to the launch of our BlackBerry 10 smartphones, plans and expectations relating to our core program, and other statements regarding our plans, objectives, and expectations. We will indicate forward-looking statements by using words such as expect, plan, anticipate, estimate, may, will, should, forecast, intend, believe, continue, and similar expressions. All forward-looking statements reflect our current view with respect to future events and are subject to risks and uncertainties and assumptions we have made. Many risk factors could cause our actual results, performance, or achievements to be materially different from those expressed or implied in our forward-looking statements, including our ability to enhance our current products and develop new products and services, risks related to further delays in new product introductions, risks related to intense competition both in North America and internationally, our ability to maintain and grow our service revenue, our reliance on carrier partners and distributors, security risks and risks related to the collection, storage, transmission, use, and disclosure of personal information, risks relating to network disruptions and other business interruptions, our ability to maintain or increase our cash balance in light of the challenge we face, our ability to implement and realize the benefits of our core program, our ability to retain and attract key personnel, our ability to maintain and enhance the BlackBerry brand, risks associated with our international operations, intellectual property risks, difficulties in forecasting financial results given the rapid technological changes, evolving industry standards, intense competition, and short product life cycles that characterize our industry, and other factors set forth in the risk factors and MD&A sections of RIM's filings with the SEC and Canadian securities regulators. We base our forward-looking statements on information currently available to us, and we do not assume any obligation to update them except as required by law. I will now turn the call over to Torsten.
Thank you, Paul, and thank you all for joining the call today. I will let Brian talk about the specifics from the quarter so I can address some of the challenges and actions that we're taking. As discussed over the past few months, our first quarter results reflect the platform and product transition we are going through, ongoing market challenges, and the competitive dynamics we are seeing across many of our markets. This was a challenging quarter for the company on many fronts, and I am not satisfied with the financial performance we are reporting today. I want to assure you that we are not standing still and that we are continuing to accelerate our focus on our key initiatives. I would like to address 4 key areas on this call, including Q1 sales, the updated timetable for our first BlackBerry 10 device, our outlook for the next couple of quarters, an update on our operational and strategic review. So let me get started with Q1 sales. In the U.S., revenue has stabilized, showing only modest declines, but churn has remained high. We are aggressively working with our carrier partners in this region to upgrade customers to BlackBerry 7, and we have had particular success with the BlackBerry Bold product. We're also working closely with our enterprise customers to maintain our enterprise subscriber base and upgrade these customers to BlackBerry 7. In the international markets, revenue has declined in the first quarter, reflecting pricing pressure due to competitive market dynamics and the age of our in-market product portfolio. However, we have begun to refresh the portfolio with new BlackBerry Curve products in the UK, Middle East, and Asia Pac in the first quarter, and will continue to drive these new devices into our global carrier and distribution channels in Q2. Initial results from these launches are positive, and we believe these products and other programs can help to reinvigorate sales in these regions. Despite challenges in the quarter, we grew our global subscriber base sequentially in LATAM, Asia Pacific, and the Europe, Middle East, Africa markets. The overall BlackBerry subscriber base grew in the quarter and now stands at approximately 78 million users. We have shipped approximately 260,000 playbooks and have sold out of the 16 gig model. We continue to sell the 32 and 64 gigabyte models. And new LTE playbooks are in the final stages of testing with certain carrier partners, and we expect to launch these in the near future. The second item I'd like to discuss is the updated timetable for BlackBerry 10 that we announced today. The successful launch of the BlackBerry 10 platform and the delivery of high-quality, full-featured BlackBerry 10 smartphones remains the company's number one priority. Over the past several weeks, RIM's software development teams have been very successful in the development of substantial features for the BlackBerry 10 platform. However, with the long and strong inflow of the integration of those features into the integration process into the platform, this has proven to be more challenging and time-consuming than anticipated. I want to make clear that these issues are not related to the quality or functionality of the features in the software, but rather to the time required to manage the integration of such a large volume of incoming code and to prepare it for commercial use globally. Based on the current status of the software integration, it has become clear that the schedule we were working towards, which would have the first BlackBerry 10 smartphones in market this calendar year, is no longer realistic. We now expect the first BlackBerry 10 commercial launches to occur in the first quarter of calendar 2013 on a global scale. RIM's development teams are relentlessly focused on ensuring the quality and reliability of this platform. I will not deliver a product to the market that is not ready to meet the needs of our customers or provide anything less than an outstanding user experience with the quality I expect a BlackBerry product to have. There will be no compromise on this issue. In discussions with some of our global carrier partners on the launch plans for BlackBerry 10, many actually prefer a Q1 launch, as many of their new global LTE networks will be getting in place by this time. We expect customers will be delighted by the quality, variety, and quantity of applications on the BlackBerry 10 platform when it is launched. We plan to have a broad spectrum of applications available from every category, including games, multimedia, productivity, enterprise, and social media applications. Developers have already submitted over 25,000 Playbook applications to BlackBerry App World, many of which will run on BlackBerry 10, and we're expecting tens of thousands more, including applications built specifically for BlackBerry 10 by launch. We're extremely encouraged and excited by the traction that the BlackBerry 10 platform is gaining with application developers and content partners following the successful BlackBerry Jam session for developers we held at BlackBerry World and the ongoing 12-week, 23-city BlackBerry 10 Jam World Tour that has sold out London, Barcelona, Berlin, Toronto, Montreal, New York, Santa Clara, and Singapore. BlackBerry World was a major success for the company, with more than 5,000 attendees. We provided a sneak preview of BlackBerry 10 and seeded developers with the first BlackBerry 10 Dev Alpha device. Developers are excited by the Dev Alpha form factor, high-resolution display, and the horsepower, which allows for fast and powerful apps that can stream content quickly and easily. And developers have already embraced the BlackBerry 10 platform, showcasing apps at BlackBerry World in May that took camera integration, our first-in-class HTML5 browser, and social abilities for apps beyond anything we've seen on a BlackBerry before. More than 20 partners demoed working BlackBerry 10 apps at the show after having the tools for less than 2 weeks. BlackBerry 10 is a platform that truly lets people share and create content and communications in all forms, whether video, photo, music, graphics, voice, or messaging. In terms of our outlook, we are expecting the next several quarters to be very challenging. We are in the midst of a platform and company transition, and we face an increasingly competitive environment. We plan to continue to aggressively drive sales of BlackBerry 7 handheld devices through the implementation of programs to both drive upgrades from older BlackBerry products to BlackBerry 7 handheld devices and attract first-time smartphone buyers to BlackBerry. While these dynamics are expected to result in an operating loss in the second quarter, we have a plan to dramatically adjust our cost structure going forward to make RIM more efficient and to better align resources with our future opportunities. In addition, we have a strong balance sheet, which we are committed to maintaining. I know I have delivered a lot of tough news today, but I want to highlight what we're doing now to concurrently address all these issues and commit to you that we're focused on driving long-term value for our stakeholders. Let me update you on our operational and strategic review. First of all, I would like to discuss the 5,000-person workforce reduction we announced today and the core cost reduction program, which Brian will discuss in more detail later. I understand this is an incredibly difficult message to deliver, but it is necessary. In order to align our cost structure to help us move effectively through our transition and deliver on long-term stakeholder value, it is necessary to change the scale and refocus the company on the areas of highest opportunity. When we come out of this transition period, we want to move forward with a lean and nimble organization that can act quickly and is aligned with our growth opportunities. We're also committed to ensuring that the reductions we make do not impact key programs such as BlackBerry 10, customer support, or BlackBerry service levels. I fully understand the impact the workforce reduction of this size has on our employees and the communities in which we operate. I assure you that we wouldn't move forward with a change of this size if we didn't think it was critical for our future. It is our intent to move forward with these reductions as swiftly as possible to minimize interruption and uncertainty within our teams. These reductions will occur over the remaining 3 quarters in this fiscal year. However, we intend to notify those affected as quickly as possible. And we're also bringing in additional key management to help RIM through the transition and to drive success of BlackBerry 10 once it's launched. New additions to the executive team include a new Chief Operating Officer, Christian Thear, and a new Chief Marketing Officer, Franck Boudin. Christian and Franck are industry veterans and bring extensive knowledge of the rapidly changing wireless global market. I am also very pleased to announce that we have further strengthened the executive team with the hiring of Steve Zipperstein as RIM's new General Counsel and Chief Legal Officer, who is joining RIM from Verizon, and Ed Bowen as Executive Vice President of Organization Development, who comes to us from his own HR consulting firm, and prior to that from Philips, where he served for 11 years in various human resource leadership positions. In addition, we have promoted Rick Costanzo to Executive Vice President, Global Sales. Rick previously served as Senior Vice President and Regional Managing Director, Americas for RIM, and managed the strategy for all operations in Canada, Latin America, and the United States. Prior to this, Rick was responsible for sales in Latin America and helped BlackBerry become the #1 selling smartphone position in the region. I am excited with the new leadership team that has been assembled and their readiness to take on the challenges ahead of us. We also recently announced a comprehensive review of RIM's strategic opportunities, including partnerships and joint ventures, licensing, and other ways to leverage RIM's assets in an attempt to increase value for our stakeholders. To ensure we have all the necessary expertise and resources to complete a thorough assessment of these options, we have hired JP Morgan and RBC Capital to help with the process and are actively working with them on this evaluation. We are convinced that BlackBerry can deliver value as an integrated hardware, software, and services offering, and we're excited at the potential for BlackBerry 10 to take this value proposition into the future of mobile computing. We believe the BlackBerry 10 platform has the potential to offer growth opportunities for the company across multiple segments, including smartphones, tablets, software, services and solutions, enterprise, automotive, in embedded and machine-to-machine type applications. There are 4 specific areas we are focusing our business on going forward. First, RIM's product and service development focus will remain on specific consumer segments only, enterprise and BYOD. As we know, the consumer and enterprise market is becoming more integrated through BYOD, and BYOD through our BlackBerry 10 platform will be an important part of the RIM strategy to strengthen its positioning in the consumer market and support the leading position in the enterprise market. Mobile device management tools are an important element of the IT infrastructure for our enterprise customers, and we intend to support these customers with a solid MDM offering. On top of this, we plan to build services that are value added for our customers and generate incremental revenue for the company. There are also specific vertical markets where we have a relative competitive advantage that we plan to pursue with our enterprise offering. We are actively engaging with our enterprise customers to ensure they are aware of our new offerings, including BlackBerry Balance and our mobile device management solution, and to work with them to deliver the types of enterprise services they want and expect from BlackBerry. We will also continue to invest in our strong automotive business, as it has great potential for a BlackBerry 10 platform in the future. Second, We also plan to streamline the BlackBerry smartphone product portfolio to offer a fewer number of devices in market at any given time. The focus of the initial BlackBerry 10 launch is primarily on the premium smartphone segment in both touch and full QWERTY. To be clear, we fully intend to lead in the full QWERTY segment with BlackBerry 10 and expect the BlackBerry 10 QWERTY version to launch in close proximity to the initial full-touch BlackBerry 10 smartphone. The BlackBerry 7 product portfolio will continue to address the entry-level and mid-segment of the market until we launch the full BlackBerry 10 portfolio. We expect the streamlined smartphone portfolio to reduce total R&D costs, increase economies of scale per device, reduce marketing and sales complexity, and provide a distinct offering for each targeted market segment. Third, we plan to evaluate opportunities to license the BlackBerry 10 platform. We are evaluating partnerships and business models to license the BlackBerry 10 platform to expand the subscriber base of the ecosystem, not just in smartphones, but potentially in other segments as well. Finally, we intend to aggressively build on our 78 million customer base around the world as we transition to BlackBerry 10 and focus on growing, developing, and executing on a consumer services model to augment the decline in ARPU we expect over the coming quarters. We plan to build this consumer services business based on the unique strength of the BBM platform, which has 56 million customers, and through partnerships with industry-leading consumer services companies. We also plan to pursue partnerships to develop and deliver these services, and intensive discussions are underway with a number of potential partners. I have provided you with a lot of information here that I will be happy to discuss in our Q&A, but let me now turn the call over to Brian, who will take you through more detail on the quarter. Brian, over to you.
Thank you, Thorsten. Revenue for the first quarter of fiscal 2013 was $2.8 billion, a 33% decrease from the fourth quarter of fiscal 2012, primarily as a result of decreased BlackBerry smartphone shipments, greater proportion of entry-level products with lower average selling prices, and pricing initiatives to drive sell-through and sell-in for BlackBerry 7 handheld devices. Sales outside the United States, United Kingdom, and Canada represented approximately 62% of total revenue, compared to 68% in Q4. Some of the larger markets comprising the other segment in the quarter were Indonesia, South Africa, and Venezuela. The decrease in other markets was primarily as a result of a less favorable product mix with lower ASPs. U.S. sales represented 25% of total consolidated revenue, compared to 17% in the fourth quarter. On an absolute basis, U.S. revenue was down slightly as we aggressively implemented pricing initiatives that reduced churn in the United States. Sales in the UK in the first quarter represented approximately 9%, compared to 10% last quarter, and Canada represented the remainder. RIM shipped 7.8 million smartphones in the first quarter. Estimated sell-through in the quarter was approximately 10.5 million units, including phone-only sales. Channel inventory is down on an absolute basis. However, the trends in certain markets are such that our partners are not carrying as much inventory. They're not replenishing their inventory at the same pace as they have historically. In the first quarter, we shipped approximately 260,000 Playbook tablets, and sell-through to end customers based on our internal data was higher than this. Hardware revenue was approximately $1.7 billion, or 59% of sales, compared to $2.9 billion, or 68% of sales, in the fourth quarter. The decrease in hardware sales is primarily attributable to the lower unit volumes, a less favorable product mix with lower average selling prices, and the adoption of new pricing initiatives to drive sell-through and sell-in for BlackBerry 7 handheld devices. Service revenue was approximately $1 billion, or 36% of sales, down approximately 12%, reflecting the 14th week in the previous quarter, as well as the change in mix of our subscriber base from higher-tier unlimited plans to prepaid and lower-tiered plans, which reduced ARPU. Software revenue was approximately $69 million. Gross margin was approximately 28% in the quarter, which was substantially lower than the adjusted gross margin of approximately 39.8%, which included the inventory provision in Q4. This decrease was primarily as a result of certain fixed costs being allocated to lower volumes and a greater proportion of entry-level products with lower average selling prices, and the adoption of new pricing initiatives to drive sell-through and sell-in of BlackBerry 7 handheld devices. This is partially offset by an increase in service revenue as a percent of total revenue. Operating expenses decreased from the fourth quarter primarily as a result of a reallocation of expenses affecting gross margin and reduced levels of discretionary marketing spend and reduced foreign exchange losses. The reallocation of expenses had a $50 million impact on OPEX and had slight impact on gross margin as well. The tax rate in Q1 was approximately 19% on a GAAP basis, reflecting the non-deductible write-down in goodwill. Excluding the impact of the goodwill charge, the income tax recovery was approximately 37%. GAAP net loss for the first quarter of fiscal 2013 was $518 million, or 99 cents per share diluted, versus net loss of $125 million, or 24 cents per share in Q4. Excluding the impairment of goodwill, the adjusted net loss was $192 million, or 37 cents per share diluted. The earnings press release issued this afternoon contains a reconciliation of our GAAP net loss and diluted loss per share to adjusted net loss and adjusted diluted loss per share. RIM generated approximately $710 million in cash flow from operations in the quarter. Uses of cash included CapEx of approximately $155 million, intangible asset additions of approximately $285 million as a result of prepaid license agreements and patent acquisitions, as well as a business acquisition of approximately $100 million. Cash equivalents, short and long-term investments increased by approximately $100 million to $2.2 billion at the end of the quarter. Given the current business conditions and the decline of the company's market capitalization, the company concluded that goodwill impairment indicators existed as of the end of Q1. Consequently, the company recorded a pre-tax, non-cash goodwill impairment charge of $335 million, which eliminates the remaining book value of goodwill. Despite all of the challenges from an operational and financial perspective, we continue to make significant progress in some of the initiatives that are intended to help us reach our $1 billion cost savings goals. With the changes executed to date, we expect to realize savings of $300 million in fiscal 2013. We plan to streamline the BlackBerry smartphone product portfolio to offer a fewer number of devices in market at any given time. The new portfolio will continue to offer both the iconic BlackBerry keyboard and touchscreen devices. Manufacturing supply chain is one of the focus areas of our core program, and in Q1 we began to implement changes that will drive savings throughout fiscal 2013. We've started the process to outsource our global repair services, and we expect the transition to be complete in the third quarter of this fiscal year. As mentioned on the last conference call, we are optimizing our global EMS manufacturing footprint to reduce complexity and improve delivery performance. This process is underway, and we expect to move from a manufacturing network of 10 EMS sites to 3 EMS sites by the end of the calendar year. We will also include an in-region fulfillment model for closer proximity to our customers. Additionally, we recently met with our suppliers to discuss further ways to reduce costs and meet our target savings for the end of fiscal 2013. We've realigned our quality organization by centralizing resources to streamline and improve execution, reduce complexity, and focus on value add. We'll move forward by providing suppliers with clear quality standards and accountability to drive additional savings. We are aligning our sales and marketing teams to prioritize our marketing efforts and spend in regions that offer the highest opportunity and return while scaling back activities or exiting in regions that don't meet our criteria. Through this targeted use of resources and more effectively leveraging our marketing windows, we have been able to reduce the budget for fiscal 2013. In addition to the above efforts, we will see organizational efficiency. Where we see we will see organizational efficiency. We plan on driving further efficiency through a reduction in the number of layers of management to drive accelerated execution and decision-making, improve performance, and more transparent accountability. We expect further outsourcing of non-core functions identified by the core program will also contribute to the restructuring. As Thorsten mentioned, it is always difficult to include headcount when making decisions to cut costs. However, it is necessary that we make these organizational changes in order to improve the company's performance in the long run. We expect the restructuring, which has already begun, will affect approximately 5,000 positions by the end of the fiscal year. The company expects to incur restructuring-related charges of approximately $350 million by the end of fiscal 2013, primarily associated with the global workforce reduction. Other charges and cash costs may occur during this process, and the company intends to share more details throughout the year regarding our progress as programs are implemented or changes are completed. The company expects the next several quarters to continue to be very challenging for its business based on the increasing competitive environment, lower handset volumes, potential financial impacts, and other impacts from the timing of the BlackBerry 10 launch, pressure on REM to reduce our monthly infrastructure access fees, a higher mix of entry-level products, and plans to continue to aggressively drive sales of BlackBerry 7 handhelds as our portfolio of higher ASP products begins to age before the launch of our new BlackBerry 10 devices. These factors will have an impact on both revenue and gross margin. As a result, the company currently expects to report an operating loss in the second quarter of fiscal 2013 as we continue to invest in targeted marketing and sales programs and continue to work through the transition to BlackBerry 10, as well as the impact of certain of the company's fixed costs being spread over a lower volume of handhelds. We expect the downward pressure on operating results to continue for the remainder of the fiscal year based on the market dynamics I mentioned, as well as the timing of the BlackBerry 10 launch. This outlook excludes the impact of the charges related to the core program. The core team is looking at all opportunities to accelerate the implementation of cost-saving initiatives earlier in the fiscal year and intend to provide quarterly updates as significant milestones are achieved. The BlackBerry subscriber base grew to approximately 78 million in Q1. However, we expect net subscribers in the United States to remain under pressure, and we will be looking to international markets to help maintain and grow the base. However, given the anticipated change in the mix of our subscriber base reflecting growth in lower-tiered plans and continued pressure in the U.S. market, we expect the ARPU will continue to decline in the second quarter. As I mentioned above, RIM has a $2.2 billion cash position at the end of Q1, and we're focused on maintaining a strong cash position through prudent working capital management and reduced levels of capital investments as part of our core program. That concludes our call, and I will now ask the operator to start polling for questions.
Thank you. Ladies and gentlemen, we will now conduct a question and answer session. If you do have a question, please press the star followed by the 1 on your touch-tone phone, and you will hear a tone indicating you are in the queue. Your questions will be pulled in the order they're received. We ask that you please lift the handset if you are using a speakerphone before pressing any keys. Again, if you do have a question, please press star 1 at this time. Your first question today comes from the line of Mark Sue of RBC Capital Markets. Please go ahead.
Thank you. It sounds as it will have to be BlackBerry 10, whatever it takes. So the question is, how do you bridge the gap between now and then? What can you do to protect your installed base outside of major price cuts so that you'll have a base to upgrade later? And also, what else can you do to reduce your cost structure? Because with the announcements, it does seem like you're getting to the bones of things, and I'm not sure what other options you might have.
Okay, let me respond to that, Mark, on the question, how do we bridge the gap? We intended to have BlackBerry 10 launch later this year. Now we move into calendar Q1. We still are in the process, as I described, to aggressively put BlackBerry 7 into the market. We still have a lot of BlackBerry 5, BlackBerry 6 out there. And we also have in those regions where we are very strong in the entry-level mid-tier kind of smartphone portfolio. We've just recently launched the Jazz series, as I said in my text, and we're seeing quite some good pickup on that. So I expect this to help us in the next quarters and to stay relevant in those markets and have offering for our customers in this market. In enterprise, as I said, we are still upgrading our enterprise customers towards BlackBerry 7, making good progress with this. I expect us to be successful in bridging this gap and in protecting our installed base through those measures. On the cost structure, I would let Brian comment on any further actions and activities that we could take.
Sure, and as I mentioned, the core team's looking at all opportunities to try and accelerate cost savings earlier in the process and earlier in this fiscal year, and certainly as it relates to manufacturing and our actual product costs, we're looking at everything we can do on bringing those product costs down, and I think we can gain a lot on the efficiency side with our EMS sites that I mentioned, and again, we're looking at every opportunity to really to push the savings as early as we can in this fiscal year, and I think that's what the team's focused on.
I don't think they can bridge the gap. I think they have to hope the drop doesn't kill them.
Sorry, Mark.
I also apologize, but your next question does come from the line of Kulbinder Garcha of Credit Suisse. Please go ahead.
Thanks. I have just a clarification, a question. My clarification is, I guess, Brian, did you guys have negative gross margins in your hardware business this quarter? Because I'm backing into it, given that your services gross margin should be in the 80s or maybe 90%. And if that is the case, I'm just not sure what gets that better until BlackBerry 10, because your products that you're selling, unless you've got something major coming out, new product-wise in the next 3 months, you're probably going to operate at that level for some time, number one. That's my first question. The second one is, Torsten, with respect to the strategic conversations you're having, I'm sure you can't disclose too much, but how extreme a scenario are you prepared to consider in the next 6 months?
Good question from Kulbinder.
Really on the cards, or is it that the conversation you've had leads you to believe your best course of action for shareholders is to really continue with your existing strategy? Many thanks.
Yeah, I'll take the hardware gross margin. I had mentioned that there was some sales activities that were reclassed into the off revenue category, so that did have an impact on our hardware margin as well. But certainly our hardware margins were at a low point for what we've seen. But that again speaks to the opportunities we're trying to drive in terms of pricing initiatives to drive selling and sell-through of our BB7 devices.
But the question, Brian, is do you have negative gross margins in hardware? That's why I find it hard to believe that that's happened so quickly. Or is that just the way the business has evolved, so it deteriorates so rapidly?
I'd say there were certain products that we definitely had seen some push down on ASP, and again, I go back to the point about the on lower volumes and the fixed costs being absorbed over the lower volumes. That did have another effect on our overall handheld margin relative to Q4.
Okay, let me answer on the strategy question. You're absolutely right. We have engaged, and the teams are working together on evaluating, strategic options in various dimensions. And we're working through this as we speak with the teams, and we will have to share results probably later when the teams are done. However, I want to really make clear that we're not just building a new product, right? We're building a full new mobile computing platform that cannot be underestimated. So I think in terms of long-term stakeholder value, this platform will provide a basis to really create that long-term stakeholder value. It's not just about the next smartphone or the next tablet. It is really about a great new platform that we're building. So the teams are fully focused on this. They're working hard to get that done. I guess would we have loved to be a bit earlier? For sure. But we are where we are in quality and just an outstanding user experience. That is what we want to deliver when we bring BlackBerry 10 to market. And we will do this. And in parallel, we're running those strategic assessments as you have asked about. And, they range from RIM executing on its plan standalone to, whatever other model you could think about. However, this is not the time to share any detail. We will share the details and the progress we're making when we have those results. And it's actually also a matter of the board deciding on, what strategic direction they want to take the company into.
Great. Thanks, Kulbinder. Next call, please.
Your next question comes from the line of Jim Suva of Citi. Please go ahead.
Thank you very much. Just a clarification. It sounds like that you're saying the operating loss in Q2 is going to be even greater than Q1. Did I hear that correctly?
No, I didn't say that.
You did or did not?
No, I did. I just said we were going to have an operating loss in the quarter.
Okay. All right. Yeah. And then do you think RIM is going to be able to maintain its cash flow generation or start burning cash?
Thanks for that question. In terms of our cash flow, it's obviously a priority, and within our core program, working cap management is one of the areas of focus. So we're looking at inventory turns, CapEx investment, and you can see that in the trending in the last few quarters on our CapEx investments or spend has gone down. Based on our current liquidity and cash flow projections, and we also have an unused credit facility. We think it's sufficient in the near term to support our business, but we are continuing to work with our banks on renewing that facility as well. And we continue to continually evaluate our needs for our business. And, as I mentioned, the focus within the core program and ensuring the liquidity of the company is critical for us.
So no comment about using cash as opposed to understanding your bank lines of credit and such.
Well, I said that in this coming fiscal quarter, we're going to maintain our cash position, and it's a continual focus on our core program to drive opportunities for efficiency in our cash flow management. Inventory is one huge area of focus, and our CapEx spend and where we're investing is another.
Great. Thanks, Jim. The next question, please.
Your next question comes from the line of Amitabh Passi of UBS. Please go ahead.
Hi, thank you, Brian. Just a clarification from my end as well. I think you talked about OPEX savings about $300 million this fiscal year 13. Just wanted to clarify, is that total savings you'll see relative to fiscal 12, or if I took the existing OPEX structure, you think you could drive another $75 million of savings on a quarterly basis by the time we exit fiscal 13?
No, what I was referring to is in all the initiatives we've done within the core program, we've executed on initiatives that will affect $300 million of savings in the rest of this fiscal year. So okay. It could come through our cost of materials. It could come through OPEX.
Okay.
And I won't get into the specifics of the allocation.
And then just as a follow-up now, maybe for you, Thorsten, can you, remind us what key performance metrics is your compensation based on? And similarly, the Chief Marketing Officer coming in, the Chief Operating Officer, how should we think about what metrics will you be assessing their performance on, or the board in terms of their compensation?
I think that question is a discussion between me and the board and a relation between the board and I, so I'm not in any way in a position to comment on that or give any information there.
Great. Thanks, Amitabh. And just a reminder, just so everyone can ask a question, just one question at a time, please.
Your next question will come from the line of Rod Hall of J.P. Morgan. Please go ahead.
Yeah, thanks for taking my question, guys. My question pertains to the services business and the ARPU. As we calculate right, the ARPU decline year over year is around 10% in the quarter. And so I just wonder, Brian, you mentioned there's continuous pressure on those ARPUs. I wonder if you could walk us through maybe a little more color on exactly what's going on there. And also, it'd just be interesting if you could help us understand what the mechanics of the ARPU renegotiation process are. Are there contractual terms that may cause that process to go more quickly or more slowly? If you could give us any idea on that. And then I just also on services, while you're at it, could you help us understand whether you'd be willing to give us more detail on that services business? We all kind of can take a guess that it's high margin and so on, but it would be helpful to know a little bit more about it, to be able to calculate returns on capital in that business and so on. So A lot of people out here trying to value that business. Just wonder if you guys would be willing to give us any more detail on it.
So your first question on the ARPU change, I don't have the exact number year on year in front of me, but just some of the mechanics of the change. I had mentioned how the sub base in some of the churn that we're seeing in the U.S., that churn may be coming off the higher tiered plans, and where we're actually picking up subscriber growth internationally is coming on the lower tiered plans. So that's where you get a significant ARPU change quarter on quarter, which is impacting the overall base of on our ARPU change. So we continue to see that in our forecast coming forward, and that's the reference point I was making on the ARPU change.
Your next question comes from the line of Simona Jankowski of Goldman Sachs. Please go ahead.
Hi, thank you. I just wanted to ask you about the delay in the timing on BlackBerry 10. Given how fast we tend to see innovations in things like chipset roadmaps and displays and so forth, by definition, wouldn't you expect it to have slipped back in terms of its competitiveness, even just from a hardware perspective, if it's going to have kind of 6-month-older technology at that point?
Yeah, thanks for asking that question. When we designed BlackBerry 10, we did not just design a product, we designed a platform. And consequently, in this platform, we were going for really, really high-end spec because that is an aspirational product that is supposed to really excite the customer. So without going into specifics before we actually really launch it and disclose all elements that make up this great product, good question, but I'm very, very confident that this product will absolutely deliver on its performance. And hardware plays a key role in it, but what will be really, really different and exciting about BlackBerry 10 will be the entire user experience, will the applications that you will see on that product, will be the features that are really targeted to, the BlackBerry segment of people that use a BlackBerry for their purpose. So hardware plays a role in it. In my view, that is very, very well covered. I'm not concerned about that. And I think based on the hardware we provide, we will be more than competitive, and we will have a great user experience based on the BlackBerry 10 platform on it.
Great. Thanks, Simona. Next question, please, operator.
Your next question comes from the line of Scott Sutherland of Wedbush Morgan Securities. Please go ahead.
Great. Thank you. When you look at the ecosystem of the BlackBerry 10 launch, and I know you did some acquisitions on some cloud-based solutions, your competitor out there has 125 million subscribers. How do you plan to create a roadmap, maybe your 78 million subscribers or other device users, to move to a cloud-based system that could, make this more successful launch?
The way I look at this is twofold. You have applications that reside on the device itself, like the whole PIM suite or your all of your communication channels. And then today the cloud is basically used to store data on the cloud. We have designed BlackBerry 10 to be a real open system for its end users. You basically can use the cloud of your choice, and it's extremely easy and comfortable to connect to the cloud of your choice and build and drive that. BlackBerry 10 is really an all-encompassing architecture. It's not just, as I said, a device with software on it. The way it connects to the ecosystem, the way it leverages the ecosystem, the way it leverages media content coming to the device is a whole new user experience. So I think it's important to take away from this question that the BlackBerry 10 platform is a fully open platform, and it's really easy through the developer toolkit, through the runtimes that we have to really easily connect to that system.
Great. Thanks, Scott. Next question, operator.
Your next question comes from the line of Tal Liani of Bank of America. Please go ahead.
Hi, thank you. The question is, what are the arguments for maybe doing something completely different, in a sense that it seems to me like you're trying to do exactly what Nokia has tried to do initially and others, and it don't you think it's a little bit too late to try to develop another ecosystem and another set of applications, et cetera? So the question is really going back to core discussion of strategic value and what are the values of the company and how can you create value, or rather maybe the right strategy is to focus and shrink and go only to the corporate market and focus on this market. So I really want to hear just your line of thinking when it comes to long-term strategy rather than the quarters, how they play out. Thanks.
Yeah, so I think the answer to your question is that exactly in light of the long-term strategy, long-term value creation, we came to the decision that joining the family of the Android players, for example, would not suit RIM's strategy and its customers. We are not trying to be one of many. We're trying to be different. We're trying to be the best solution for our customers that buy a BlackBerry, know why they want a BlackBerry, and we're aiming for nothing less than being a viable, successful mobile computing platform of the future. This is what we're aiming at. And I think that's the difference if you compare us with others. Did we take the hard route? Absolutely. Absolutely. But having done this and building and completing this new mobile computing platform that then expresses itself as a smartphone or as a tablet or as a vertical application or embedded in cars, whatever you want to do, that is where we will take BlackBerry. And that's why it was absolutely required and necessary to build this own platform. I would argue the other way around. If I continue to rely on somebody else's OS and somebody else's platform, would that allow me in the long run to really differentiate towards my customers and provide them the services and the environment that they request from me and that they would like to have? I have a big question mark around this. So I think going this way and building the platform we're building has the absolute intent to serve our customers and our markets better than on a standard-based OS and platform.
Right.
And how do you...
Tal. Sorry, Tal. We'll get back to you. Next question, please.
Your next question comes from the line of Kevin Smithen of Macquarie. Please go ahead.
Thanks. I wondered if you could go through some of the amortization here. Looks like there's obviously a wide gap between that you've reported $136 million in a positive free cash flow this quarter, yet a large operating loss. Your amortization looks like it was up, close to $80 million year over year in the quarter. Why are you still adding intangibles? And can you explain this discrepancy? And when does amortization peak out?
So thanks for the question. In terms year on year, it's obviously reflecting CapEx investments that we've made, and the other question on the intangibles, that we do have ongoing investments in prepaid license agreements that we've been seeing over the last number of quarters. And when as you can see that as I mentioned earlier, our CapEx investments have been coming down quarter on quarter, and that should reflect in lower amortization. And that is another focus on our core team in how we're actually managing CapEx investment relative to our amortization line and how that gets depleted. So from an EBITDA perspective, you're right, we do have positive EBITDA, and the increase year on year on the amortization reflects those investments over the last 12 months.
Is that likely to keep cash flow positive over the next couple quarters? Even if there's an operating loss?
Well, I don't want to comment on the next couple quarters, but in terms of what I was saying about next quarter, in terms of maintaining our cash position, that's accurate.
Great, thanks, Kevin. Operator, next question, please.
Your next question comes from the line of Daniel Ernst of Hudson Square Research. Please go ahead.
Yes, good evening. Thanks for taking my call. In the competitive landscape, you have a lot of developments and competition at that high end with, now iOS 6 coming out and with Windows Phone 8 coming out and Android 4.1, all going into devices at the high end. BlackBerry 10, which addresses that high end, is late, and so I imagine you'll continue to have customer erosion in that segment. But also you're seeing pressure at the low end of the market, which is being served by Android devices, which are still app and touch-centric devices. What do you have in the pipeline? What can you say about your competitive response to also try and maintain that low end of the market as it goes more sort of app-centric, cloud-based, low-end devices? Thank you.
Thanks, Daniel, for that question. Yep, there's a lot of competition coming. That's the nature of, consumer electronic business and being in a growing market, and we're not afraid of this. Again, as I said to the question before, this is why we've built our own platform, because we want to be distinct, we want to be differentiated, and we want to deliver to the BlackBerry people. We really want to serve our market segment, and we want to be the best in helping BlackBerry people to achieve what they want to achieve. And I think with our future BlackBerry 10 offering, we have a very distinct value that we can bring to the market, and that you will hear later about. As far as the low end is concerned, yep, I think the trend you're describing is correct. There is, that's where the volume segment is. This is where the majority of the onboarding happens, from feature phone and regular phones into the smartphone segment. And we're addressing this through the recently launched Jazz series, a 2G and a 3G product. And we have had great success with our former product, the 8520. So we strongly feel about being able to cover that segment even in a more competitive environment. The question about the form factor, you were talking about touch, app-centric. I mean, if you look for specifically into those markets where we're very, very strong, like Latin America, Africa, certain countries and regions in Asia-Pac, this is actually where messaging still plays a major role. This is also where many, many BBM users are out there. And they're still very much attracted by the QWERTY form factor that we provide them. So we see the competition. We know we have to be able to compete, but also with the new product line on the Jazz series, we feel we're prepared to do this.
Great. Thanks. Operator, we'll take two more questions, please.
Excellent. Your next question comes from the line of Scott Thompson of FBR Capital. Please go ahead.
Good evening, guys. Quick question on patents. There's a lot of valuing of these assets going on. Can you give us a little more detail around what type and what you hold and what they might be worth and that sort of thing moving forward? Thank you.
I mean, on the patent side, you're right. The whole industry is focusing around patents and what is the various patent holding of various companies. Given the activity in this sector, I ask for your understanding that I'm not in a position to really give you detailed information here. What I can say is that, RIM is a very innovative company. We employ strong research groups, and, writing patents, getting good patents, meaningful patents has and always will be part of RIM's DNA. And I think we are pretty successful in getting there. So without getting into any further detail, I think we are in a good position on patents.
All right. Last question, please, Liz.
Your last question comes from the line of Mark McKenzie of Think Equity. Please go ahead.
Oh, great. Thanks. Just a simple question. I don't know if you said this already, but one is how many employees do you have? Will you have before and after the 5,000 reduction? And then if you could just clarify also, I heard a bunch of different answers, but on the net cash balance, do you expect it up, down, or flat at the end of August versus the $2.2 billion? That's it. Thanks.
Yeah. Okay. Okay, Brian. On the employee number, we have 16,500 people on board right now, and the math tells us that reducing this by 5,000 people will lead us to 11,500. Now, the way we do this is, has different strategies that Brian was talking about, potentially outsourcing certain functions that are meaningful to a business but are not key and are not core to a business, so we can leverage and we can use economy of scale of other companies. So it will be a mix of various activities that we will be taking, but it will be around an 11,000 number globally, employee number for RIM.
Sounds like they haven't even decided who they're getting rid of.
As I said, we're trying to be as responsible and as respectful to our employees and the communities we're in. So we're trying to do this as fast as we can to really avoid any uncertainty with the people that are affected. But the number is supposed to be reached by the end of the fiscal year.
And as it relates to the cash balance, I had mentioned earlier that we were based on our current projections and expectations that we would expect to maintain our cash position by the end of this, at the end of Q2. And however, that could be impacted by, as Thorsten was just mentioning, the implementation of some of these core activities, which likely would have a cash impact on it, and it would depend on the timing of initiatives.
That's great. Thank you, Luke, and thanks everyone listening on the call, and we look forward to speaking to you on the next conference call. Thank you.
Thank you.
Wow, they really don't know how to anticipate the questions they're going to be asked.
Not today.
Okay, everybody, welcome back. That was the live earnings call webcast. We piped it into the podcast feed here, so hope that was convenient for everyone. Renee, I think you have the video up, but I'm currently sitting in a hotel room on crappy Wi-Fi, so I have my video turned off. I don't even have the website open to see the chat going on, because I noticed there was a super, super active chat. Everybody's going like crazy in there, and it killed my internet several times. So right now I'm just on audio, but Chris and Adam are still here. Chris, yeah, pretty brutal call, I think.
Yeah, I'm disappointed that they haven't clued in yet that there's a certain number of questions that are, forgive the term, freaking obvious, that you should know exactly what's coming and you should have prepared answers for these questions. And I mean, for that matter, just the whole script, like it just pisses me off when CEOs are reading the press release. It's just annoying. Like, if a company's going to mis-execute like this, at least get your freaking communication straight so that your messaging is super crisp. And it just didn't feel like it was the Thorsten that we saw at BlackBerry World.
A little bit not, right? Now, that said, still, picture Jim Balsillie or Mike Lazaridis on that call.
Yeah. Yeah, good point.
So he still keeps it together much, much better, but not quite as, I don't want to use the word slick, but not quite as prepared maybe for this one.
He's more raw and honest, and that's fine. I mean, I can understand, for example, they're not going to tell us what their strategic directions are going to be outside of launching BlackBerry 10. Why would they? It's not the right thing to do. Sure. You don't go announcing that kind of stuff publicly before you make a decision internally. And obviously there's some discussions going on. Another thing that I found interesting is the discussion of hardware margins. So it sounds like hardware gross margins are negative, or at least according to one of the analysts on the line was saying, hey, your hardware business is generating negative gross margin. That's a real problem for RIM. And, how can they recover from that? The only way to recover is if ASPs, or average selling prices of the hardware, go up when BlackBerry 10 launches. And you're in a market where device prices are continually under pressure. So yes, you're respinning your platform, but it's going to be tough to bring your pricing points way up from here, right?
Yeah. That's been an ongoing problem with RIM for the last, couple of years, I think, as competition went up. Is one of those things for I guess, former.
Your voice is breaking up.
I don't know if your internet's going to hold up there, Ken.
Yeah.
Carriers want better. Talk, guys, talk.
What's your take, Adam? I mean, let me ask you, Adam, what did you think about the idea of delaying this thing? And he doesn't seem to want to compromise BlackBerry 10. Is that good, or is that, risky?
I think I can see it from both ways. Like right now, I kind of see it as good. Well, I think it's both. It's good and risky. It's definitely depressing. I'm still kind of a bag of emotions. I don't know how I feel about it totally, but at the same time, I'm not surprised. But it sucks that I'm not surprised. Because this is kind of something that we've come to. I don't want to say come to expect, but I guess that's the case. But I think it's risky, but it could be good. I don't know if it'll pay off in the end, but it just kind of sucks because everybody, the waiting was long enough as it was, for October, November, whatever it was going to be. So just stretching it out, even though it's only another quarter, stretching it out into that other part of the year just makes a huge difference. So it's going to be tough. Now I feel like they just keep digging deeper holes every time, something comes up, and then they have more and more to make up for. So it's kind of a drag, but I guess we just kind of have to wait it out and see what happens. We got quite a ways to go. So
yeah.
You guys hear me right now?
Yeah, I can hear you.
Can you hear me right now? Can you hear me right now? Can you right now?
You're coming and going.
Yeah, you're good. Go ahead, Tim.
It reminds me of. Can you hear me?
Yes.
Okay, so it reminds me of like an Ayn Rand book, like Fountainhead, where you get these characters like Howard Brooks, and they are not willing to compromise at all, right? It's, they live a life they refuse to ever sell out, and it makes for a very it's torture on them, right? I cut out.
Huh?
I don't know if he just cut out or if he finished.
Yeah, this is annoying.
Talk.
I'll try to call him maybe on a different line.
I think he's dropping, but yeah, I mean, I don't know, Chris. I mean, you can talk more on it because you know more of the numbers and everything they threw down in there, but it's just it's frustrating. It's definitely sad and annoying, but it's it's frustrating more than anything because we get kind of excited for these earnings calls. Well, I do anyway, being the addict, but you get excited for them, and then it's just one thing after another, and it feels like they're just prolonging. And when you sit and think about it, quarter one of 2013 is it's quite a ways. So I already waited for one child to be born. Like Kevin said in the chat before, it's kind of like you're waiting on this 9 months, just to see what pops out. But they definitely have to do something big and crazy, and it's just super hard to tell because we're so far from it. So we'll still cross our fingers. But
I mean, okay, let me try to put. I'm not going to say positive spin on this, but let's just put a little bit of realism around it because delays. We've seen RIM delay things many times in the past, and so the question is, does a delay like this completely kill the company or not, right? And the way I'm thinking about it is, yeah, it can. It absolutely can because it can kill your developer momentum. And, you can get developers who say, oh, geez, you told me this was going to be out. I've been spending money and time investing in an app that I thought would hit the market late 2012. Now you're telling me I can't monetize my app until 2013. F you. Like, you guys just totally screwed up my business. And so I can see that. I'll keep talking. So from a developer perspective, I can see why there's a lot of frustration. Will it kill the company? So let's talk about that a bit. You've got a United States market that has already bottomed out. I think that was one of the first things Thorsten said is that U.S. revenue has stabilized, whatever that means. I mean, it's stabilized essentially at, zero, right? Like close to zero. So it's stabilized. Okay, it can't really go down from there. Then they're growing, or at least they're seeing subscriber growth in other areas of the world. So they're still growing. That could turn around on them in the next couple of quarters. I think we have to expect that it will turn around on them. But that said, what is the average lifespan of a phone? Well, it's probably a couple of years, right? You tend to hold on to your phone for a 2-ish year period of time or so before you upgrade. And they're going to delay. So they're delaying this about a year from its original intended launch date. Because I think you can correct me if I'm wrong here, Adam, but I think their original intention was to launch BlackBerry 10 early in 2012, right?
I don't know. Kevin's here now. I think originally it was always towards the end of the year. I don't remember.
Well, last time they deleted on the LTE chipsets.
When I was at the AGM in Waterloo last year, in summertime, that was when Mike L said, I think, Q1 2012, he recommitted to that for phones or QNX phones. So we're looking at full 12 months delayed.
Okay, I think we're on the same page. I think we're talking pretty close to a year of delay from the original intention to now. I think at some point they said it was more like a summer 2012 or whatever. But anyway, call it about a year. My point is, and I'm curious what you guys think about this, a 1 year delay in a platform is about 1/2 of a life cycle of a device, right? So it will certainly harm your ability to get upgrades from a large portion of the audience, but not everybody. And then it all comes down to cash. So do you have a balance sheet to survive? If you have a platform to carry you forward, whether it's delayed a little bit or a lot probably doesn't affect your long-term future. It certainly hurts in the short term, and the market punishes you. But does it affect your long-term capability to compete? As long as you have a balance sheet to compete, I would argue, no, it doesn't really have much of a long-term impact. And what killed Palm is that they ran out of cash in this transition to WebOS. And RIM still has $2 billion of cash, more than that. They're not burning it yet. It doesn't look like they're going to get to negative cash flow in any serious degree right now. And they don't have debt. So there's still a good chance that if they execute this long-term, and I mean multiple years, it won't actually have much of an effect on them. But in the near term, man, does it look bad, and does it still feels depressing. What do you think?
Yeah. Can you guys hear me okay?
Yeah.
So I said this on the chat room, and I'm gonna say it now vocally. So there's two ways to look at the RIM story right now. One is we're either witnessing the slow death of RIM, or we're kind of witnessing like 9 months of labor before they give birth to a new business. And I mean, the optimist in me obviously wants to look at it as, BlackBerry's pregnant right now, and that's what we're seeing. But if you think about it this way, how many iPhones did Apple sell in the smartphone business before they released the iPhone? Or how many phones did Apple sell in the smartphone business before they released the iPhone? None. They worked on iOS for 3 years behind the scenes. They didn't make a penny in the phone still. And they came out with something. They came out with a platform which, grown in those 5 years.
You're making a very good point.
They're building a new business. So you can almost look at it as a bonus that they even exist with the current cash flow. They're trying to come into the market with something, really built for the future. And, chance. I don't know. But the problem is it's almost being on the market hurting.
Yeah, I don't know if you just cut out there or if you were still talking, but I agree with you. That's a really interesting analogy. So if I heard you correctly, you were saying Apple came onto the scene from nowhere. They didn't have any market share. So they were at zero, like RIM is heading towards, and they came out with a great product and they did very well. So can RIM do the same thing? Yeah, I think they can. That's what my point was about the delay, right? So the delay is very, very painful to us in the short term. But as long as they don't run out of cash, and it doesn't look like they will, it really comes down to how good is this product, and that's what we all need to know. We don't know how good this product's going to be. It looks like it has the potential, and they keep talking about the future of the mobile computing future. And this is more than just the smartphone now. This is about taking QNX and turning it into a full-fledged operating system for the mobile environment. And, I guess it sucks, but we have to keep being patient here.
Yeah, I think the big difference for RIM right now compared to the Apple analogy or the Apple story is when Apple came onto the market starting at zero, the competitors, RIM, Windows Mobile, they weren't doing much, right? They were kind of just slowly milking more and more dollars out of the market with incremental product releases. And, people were more or less happy, but it was really Apple's pushing, now Android's pushing, and RIM is not coming onto the market with a new platform with other people more or less standing still. Android's pushing ahead at full speed, so is Apple. So for RIM to kind of hit the ground with a high-end product, I think I can't help but wonder if that's part of the delay too, is they need to make this platform better and better and better, because it just will not cut it anymore.
Yeah, exactly.
It is, yeah. And I was going to plan on keeping her in here because I figured I could mute my mic, but you screwed it up with your crappy internet connection. So
I was going to say you got to mute your phone, but you can't.
I don't know if there's too much to talk other than, look, this is really a crappy day again for RIM. We're used to having crappy days. We knew it was going to be bad. I think the in terms of the numbers in that, I think they came in kind of where we expected. Maybe they were going to be probably not great. I think the thing that really sucks is the fact we're now meeting 2013 instead of late 2012. Because that's a long time. That's a really long time to wait for phones, considering the Bolt 9900 last year was their flagship. So that's like, it's going to be like a year and a half or more hiatus on getting something new. And that's it. So we got to persevere through it. Hope they're doing the right things in Waterloo, and hope BlackBerry 10 is freaking awesome.
Yeah, I'll give you guys another way to think of this too. So there's a lot of people out there who think that Microsoft is not out of this game. Obviously, there's tons of people who believe Windows Phone 8 or Windows 8, whatever you want to call it, is gonna be a contender. And Microsoft has been freaking nowhere this entire time, nowhere. And they have managed to stay in the game, or at least in people's minds in the game, because they have cash. They are not a cashless company. And that is the huge difference. Everybody that wants to compare RIM to Palm, it's the worst comparison you could possibly make, because it all comes down to balance sheet. At the end of the day, if Microsoft has a great product, they will gain market share. And if RIM comes out with a great product, they will regain market share. And it's as simple as that. If they don't, like I said in the chat room, if they don't die, the question of, how are they going to bridge the gap? They can't bridge the gap. BlackBerry 7 is not a bridge to this gap. I'm sorry, it's not. So you either die in the fall, or you bounce and you survive. And cash is what matters here.
Sounds like the basis of a good editorial, Chris. This is not Palm.
Yeah, so a couple more beers in me, and that's what I'll be writing about.
We have a bunch to do. We might want to do another podcast, early next week or something once I'm back home to see all the headlines. Where the RIM stock settles out. It's going to be interesting to watch.
Just crying for RIM.
Yeah. Somebody made the comment that this is a perfect metaphor for RIM. Kevin's internet issues and Adam's crying baby. Oh man, yeah. So should we call it here then, and we can do another podcast when we have more coherent thoughts?
Okay.
Okay, guys.
Should we pack it up?
Pack it up, yeah. It's too hard to do this podcast over a phone. It's pretty good. Well, I called Adam's speakerphone, or phone in his office, which he has on speakerphone, which is now getting pumped to Skype, which is getting pumped back into a mixer, which is getting pumped into everybody's ears, back out into interwebs.
Crazy, man. So, all right, enjoy the rest of your time in San Francisco, and I will get a deeper look at the numbers.
Cool. Okay, talk to you guys.
Thanks, guys.
The face, everybody.
All right, guys.
Rock and roll.
Awesome guerrilla podcasting, crackberry.com style. For more information, please check out Kevin on Twitter. He is at crackberrykevin. Adam is at A Zeiss. Chris is at C Umiastowski. For everybody, go to @crackberry to reach us by email. There's podcast@crackberry.com, or you can just leave a comment on the show when it goes live on the site. For all of our shows, check out mobilenations.com/shows. And we're going to come back with another Crackberry podcast early next week to make sense of all of this. Thanks, everybody, and keep your browsers locked to crackberry.com.